Tomorrow's jobs numbers could be the moment the market finally reacts. With stocks stretched, money rotating, and pressure building, this data drop might be the first real test of July's bullish momentum. Let's take a closer look. Now, we highlighted three key events that are going to be happening through the month of July. The jobs numbers, the July 9th tariff deadline, and all the earnings coming out in the latter half of the month. So will the jobs numbers be an important one? Well, if we look here, the unemployment rate is expected to rise. The forecast is actually for it to be at 4.3%. So the market is already baking in a rising unemployment rate. And so it's going to be hard for the market to get big surprise unless the number is a huge miss. Even in the non-farm payroll number, the forecast is 120,000, weaker than last month's 139,000. So already the market is anticipating weaker jobs numbers. It is going to take a pretty big miss in order for the market to get surprised by this. But we do have an interesting moment in the markets. We have an S&P 500 that is now trading over 300 S&P points above its 50-day moving average. Now, from a quantitative perspective, when we go back and analyze how many times the market has been this extended from an average moving price, it's very infrequent that this happens. And so it doesn't in any way guarantee something in the market, but it does really make the point of how stretched the market is right now. It's overextended to the upside and is going to have a little bit of resistance on making big progress without it pausing and allowing the averages to catch up and all of this overbought state to be unwound before it can continue. It is not necessarily immediately bearish. In fact, while I do believe that there's vulnerabilities to this market as we get into the second half of the summer and into that September-October period, it is very hard to make a bear case for the month of July with this kind of bull momentum getting underway. And so even if we are looking for a correction, even just to put it in context, if the stock market had a 5% market correction, it would only be a return back to the 50-day moving average, which would not be bearish. It would actually be, in the end, a buy on dip opportunity for those that were tactically looking for a re-entry. Odds are here that July is going to be a month that is going to have some bullish flows and overall some distribution and rotation. What do I mean by rotation? Well, something really interesting has actually been started yesterday. So July 1st was the beginning of the second half of the year, as well as the beginning of the quarter. There are a very large amount of funds that do quarterly rebalancing. So on July 1st, money was clearly being moved around. And what was interesting was, did we see the beginning of a new sector rotation? This may not have a huge impact on the index itself, but it may have an impact on where the opportunities are for you to trade in the month of July. So let's quickly go through this. So first of all, I want to highlight here just simply the fact that we had a very clear outperformance of technology over small caps. That's a very great illustration of the fact that the AI bubble has really been driving this momentum. This trend has been very distinct on the upside. There was a very big reversal candle that came in yesterday. Similarly, when we look at something like momentum over value, you can see the momentum stocks had an amazing run in April and May during that recovery period. And there was a very distinct breakdown on July 1st in this. So what can we take away from this? Well, let's actually look under the hood and where those moves have happened. Well, look at this. This is the value factor ETF, and you can see a big green breakout candle. Similarly, look at the sectors that had big up days yesterday. This is the transportation index breaking a 1 month high in a breakout out of a flagging formation. Look at the home builders, which have been creating creating a basing formation, big breakout candle on the upside. You look at the materials sector and you can observe again a key bull breakout out of a consolidation. You look at the healthcare space, big reversal. Now that doesn't even really actually show how big of a reversal is when you get into something like the biotechs, looking at individual names like Biogen and other plays like this, as well as Pfizer, Merck, so many healthcares had a huge move on July 1st. You look at the retail sector, look at that reversal candle as well, bullishly on that in retail, and look at obviously a big uptick in consumer staples. You can really see a lot of these sectors were laggards, and two, many of them were defensives. And now you've seen this rotation. Another example of this is the regional banks having a big bull breakout. Well, this is coming at the expense of yesterday there being distinct selling in many of those tech stocks that have been working. So the mag stocks had a big down day. Nvidia was down, Microsoft was down, Meta was down, Palantir was down for now 3 days straight. Overall, we're seeing this rotation happening. Now, this is only one day. One day doesn't make a new trend. But what will be very interesting is that even if July doesn't have a huge index move, will July be the beginning of a sector rotation where the money is going to be made in a lot of the lagging sectors, and a lot of the leading sectors are going to start to profit take and sell? One day doesn't make a new trend. Don't want to already make that official, but I wanted to bring it all to your attention to see whether this materializes into something. Nonetheless, we do have that jobs number coming out. We're going to find out whether it begins some sort of a mean reverting correction. Odds are very good that even if the jobs numbers did trigger a market correction, initially this first correction will probably be bought on dip. I'll give another video update on what I think is going to play out with those tariffs next week.